day. I'm Chartered, your accounting tutor. In today's video and class, we are going to continue with financial statement of a sole trader, which I say that the statements are divided down. We have three statements. That is statement of profit or loss, statement of financial position, and cash flow. And mind you, if you are following me up, we are looking at the first section, which is the trading account. We have just finished trading account. Then we are looking at the second section, which is the profit or loss. Then what do you mean by profit or loss? Profit or loss is an account that is prepared to determine net profit or loss. That is, the business want to know its net profit and loss, which is different from gross profit. You prepare what is called profit or loss statement. So profit or loss statement is a statement prepared to determine net profit or loss, whereby the total income of the business is being subtracted from all indirect expenses to get net profit or loss. So today we are going to look at, in this class, we want to look at what constitutes profit or loss statement or profit or loss account. Here we are looking at that the profit or loss section is divided into two. Number one, we have what is called order income, and then number two, we have what is called operating expenses. Operating expense. And mind you, these operating expenses are what we call in accounting indirect expenses. Indirect expenses. Indirect expenses. So now, let's quickly look at what do you mean by order income. Mind you, the key income in accounting is sales, and that's what sales are be addressed in the trading account. So the order income will come under profit or loss. And mind you, as you get your gross profit, that is the end of trading. Anything that comes after gross profit, it is not trading, but it is profit or loss. So that is why we are now on profit or loss. So after gross profit, certain income are added to gross profit. And what are such income? Number one, we have what is called discount received. Number two, we have what is called commission received. Number three, we have interest received. Four, we have rent received, or what is called rental income. We have dividend received. We have profit or gain on sale of non-current assets. We have reduction in provision for bad debts, or what we call allowances to customers. These are the other incomes, which after getting your gross profit that end trading, you add it to gross profit for you to get the total income. So these are what we call in accounting order income. Let's go to the second segment of the profit or loss account, where we have what is called operating expenses, or what you call indirect expenses. Indirect expenses in accounting are expenses that does not directly link to the cost of sales. The expenses that does not directly link to the cost of sales, but they must be incurred to make sure that sales go on smoothly. So this is what we call indirect expenses. Indirect expenses are also subdivided professionally into three sections. Namely, what is called administrative expenses. Secondly, we have what is called selling and distribution expenses. And three, we have what is called financial charges expenses. Most learners have it difficult to group these expenses into this section. If you go at the ordinary level, all they know is that it is operating expenses, where all the expenses are lumped together in just one single flow to get total expenses. But as you go professionally based on international financial reporting standard, these expenses are grouped into this heading so that every expense should have a section where it falls. And this is the standard we are going, so that you can be able to solve accounting at any level, professionally or otherwise. So let's look at these expenses as they are grouped accordingly. Number one, we talk of administrative expenses. When we talk of administrative expenses, the examples are, these are expenses that directly link to administration of the business. Number one, we talk of salary. These salaries are being handled strictly by administration. They are being paid. Next, we have what's called electricity bills. These are expenses. Next, we have insurance premium, that is insurance paid to insure the company or any aspect of the business is what is called insurance. It's administrative expenses. We have what we call stationaries. The items that are used in offices, small things like stapler, ruler, and all what have you, you call them stationary. They are expenses based on what is called materiality concept, whereby though they looks like assets, but because they are small, you treat them as expenses and they are under administrative expenses. Next, we have things like printing and postages and all other expenses that are linked to administration. If you understand what is administrative, these are expenses that link to the day-to-day running of administrative offices. So such expenses are being grouped under what is called administrative expenses. In the next section, we have what is called selling and distribution expenses. Selling and distribution expenses are expenses that occur as a result of making sales. As the business makes sales on day-to-day basis, such expenses are incurred. So they are not linked directly to administration, but they are linked as the business makes the day-to-day sales. Number one is what is called discount allowed. It is the process of making sales that discount allowed come in. You allow discount to your customers for motivation or to make them pay their bills fast. So discount allowed is under selling and distribution. We have what is called bad debt. Bad debt result as a result of sales. When sales are made and customers cannot pay all the money they're supposed to pay all their bills, in that case it results to bad debt, which is under selling and distribution expenses. We have what sales commission. Sales commission. Commission paid to workers that are making sales. Just like I gave the example of the Indomie company. Those people that come out to make sales, others are also paid commission even in the office. So some such commissions are also under indirect expenses. So such commission can also come under selling. Some commission are indirect, but the one that are direct, I told you, will link to cost of sales. But some commission in the business are indirect. So they will be grouped under selling and what? Distribution. Next, we have what is called increase in provision for bad debts. Just like bad debt is here, so some bad debts, you business make what is called provision for bad debts, whereby debtors are likely not to pay. So if there's an increase in provision or new provision for bad debts, such expenses is under selling and distribution. We have what is called carriage outward. Carriage outward is the cost of transporting goods to the destination for customers. Nowadays business look for ways to encourage customers to buy their goods. So if customer purchase goods and the business decide to deliver the goods to their point of destination, the transport cost of taking the goods out is referred to as carriage afterwards. Or if the business purchase goods and they are to return back because of certain what is called return afterward, the cost of taking the goods out to the suppliers now becomes what is called carriage afterward. It's either cost of returning goods or the distribution cost of taking goods to the place of destination of the customers is what is referred to accounting as carriage outward, as linked to selling and distribution. The other last section of expenses here, we have what's called financial charges. This is what is called expenses that the business incurs as a result to finance the business. What is called capital plus liabilities equals to asset. The capital, before you get the capital, certain expenses must be incurred. So in that place, certain expenses linked to financing of the business, which are grouped under what is called financial charges. Some of the expenses are what is called bank charges, interest on loan. If interest is paid on loan, because the business is getting loan to finance the business, if interest is paid on loan, it's under financial charges. We have interest on capital. If capital interest is being paid on capital for one reason or another, it is also a finance charge. We have what is called charge on bank overdraft. All these are just loan and other means of getting money to finance the business. So if expenses are incurred as a result of trying to finance the business, they are grouped under what is called financial charges. And then cost of checkbooks and others. All these are costs trying to get money to finance the business. They fall under what is called financial charges. So these are the group of expenses that fall under what is called operating expenses or indirect expenses. So if you are to prepare profit or loss account, you must follow logically to bring out all these as they are found in the trial balance of a given question, or they are found in a practical question to arrange them under your profit or loss. Finally, the result will be net profit or net loss. Don't forget that these are the items used in profit or loss account. When next we come, we're looking at the format, how this item will logically arrange into what is called the format of profit and loss to be able to get your net profit or net loss. Don't forget to follow my video because I am going to do justice to the format. After all, we now bring a very comprehensive question that carry almost all the elements to place figures and deduct them to get the final answer as we follow. Don't forget to like my video, comment, go down and ask any question where you're not where you're confused. I'll come back and clear it up. And don't forget to share the video because knowledge is meant to share so that those that need knowledge in accounting will be able to get it. I remain Chata, your accounting tutor.